Great, great. So, Mike, we've been obviously last episode we talked a little bit about industrial and office and really where those assets were going, and we were kind of ranking them in terms of velocity and investment and vacancy rates and things like that. So, we obviously do a lot of multifamily. It's been a big part of our business, as you know. Past 8 to 10 years, can't done numerous transactions, small, big, large, medium, and in between. But one thing we've definitely seen a trend of is the demand. And since we started, um, the demand's always been there, and we always typically had a supply. But definitely in the past 2 to 3 years, there's been a huge lack of supply, both on the new development front and also just existing B and C class buildings that people want to invest in and sellers want to sell. In Cincinnati in general, and we do a lot in here in Cincinnati in the metro area, tri-state area. We've really seen vacancies drop about a point. They were at around 4.5. They're now hovering in the mid to high threes in terms of vacancy. So when we started, almost like last episode we talked about, we used to underwrite all vacancy at around 10%, believe it or not. Now, in the past 3 4 years, Mike, we've been underwriting them and valuating them at around 5% vacancy, but even that's a little bit aggressive, just with where the market's been. People have been renting. People have definitely been renting. There's been no lack of trying to get the units rented, and landlords are getting the rents they're asking for. Average rent in Cincinnati in the past 12 months has gone from 1,015 a month to 1117 a month. Now that's an average, so that goes across all different bedroom types, class types, everything. When we started, we were probably looking $700-800 a month. So we've seen 50-60% growth in that range as well. And ultimately, as you know, when you have rent income increases or income of increase of income, that's going to impact value, especially in this market. Where we base all our values off the income approach. So if the income's going up, then ultimately your values are going up, and that's where people have seen appreciation. Um,
I think to hit on a couple of your points.
yeah,
The inventory in the markets that we're working in Ohio. We're the inventory. You're Cincinnati, you have about 131,000 units. Cleveland, 129, and Columbus is coming up on 200,000 units. So there's not a ton of inventory, and in all those markets in Cincinnati, Cleveland, Columbus have historically been really strong rental markets, and so
yeah.
the economics have worked out really well for investors as they've been able to we've seen steady rent growth, and we've seen vacancy basically trend down. So I think looking at this asset type and brokering it, when we do get an asset to put on the market, we typically, if it's a decent asset, decent C or above, there's really heavy demand from investors in these asset types. So we think, again, from an investment standpoint, multifamily for all markets, and including Ohio, have been really the number one asset that investors have looked to get into.
Yeah, and I think one thing that's kept us so strong here, and I could talk Cincinnati, Columbus, Nashville. Obviously, multifamily housing has to do with population and density and job growth and companies coming in and investing in the cities. And that's the real macro of it. I mean, overall, we've been very, very solid in terms of Cincinnati. We've got what? Procter and Gamble, Kroger, Fifth Third Bank, Great American, GE Aviation. Columbus, you've got one of the largest universities in the world, probably, with the Ohio State University. Nashville now becoming a real tech hub as well, music hub, tech hub. When you start getting some of these industries coming into the city and stabilizing the city, you're gonna have density and population, and where you have population and density, obviously they need housing. So on a macro scale with multifamily in general, being in a healthy economic ecosystem with corporations, with job growth, with people coming in, that's really what's going to drive the multifamily housing, and that's what's going to drive the construction of newer multifamily and new inventory, and that's what we've been able to see here, and that's why a lot of people do invest in the Midwest right now, Mike. I mean, there's
Yeah,
lots of people, companies coming here.
absolutely. No, I mean, yeah, very strong market fundamentals here in Ohio and in Cincinnati, Columbus, and and all the things you mentioned really puts some of the major cities in Ohio sort of in a tier two kind of city in terms of what it offers. You know, individuals living in those particular markets, and so that bodes well again for the economics. And when you take good economics and you take an asset type that is always in demand, in terms of people who need places to live, but from an investment standpoint, when you're buying an asset that ultimately, if you ever choose to exit out, there's typically always going to be other investors that would want to buy your asset